Hello, I'm Tina from CM's Markets. Welcome to the weekly outlook where I'll be taking you through the key events and issues that you need to be aware of this week. Last week, Wall Street rally took a breather. The Fed signaled more rate hikes from the central bank due to sticky inflation. And this week, we continue to monitor the influential economic data, including the U.S. first quarter GDP and its core PCE for May. The U.S. first quarter economic growth was at 1.3% from the second rate, and the final data is expected to be revised up to 1.5%, and the core PCE printed at 4.7% in April, which was still well above the Fed target of 2%. An elevated U.S. core PCE may strengthen the odds for the Fed to continue its rate hike cycle and press down the stock markets. On the earnings front, the chip maker Micron's fiscal third quarter earnings will be in the spotlight. The company's revenue declined about 52% year-on-year in the last quarter, and it had a loss of $1.91 per share. However, the chip makers' investors are still seeing its potential growth in the AI semiconductor industry. And lately, the company just reached agreement to invest about $2.7 billion in India for its semiconductor unit. In Asia, the focus will be still on China. China is to report its manufacturing PMI and services PMI for June next week. The economic activities in China's manufacturing fell to a 5-month low in May due to weak domestic and global demands. By contrast, its services PMI expanded for the 5th straight month after the country lifted its strict COVID-0 policy end of last year. China's economic growth has a major impact on global commodity prices, in turn influencing on the Australian stock markets, especially for oil price and copper and other resources prices. This week, we'll keep close eyes on China's economic data, finding clues for this market's movements. Talking about Australia, we'll be looking at its monthly CPI for May. In April, Australia's CPI elevated to 6.8%, which was much higher than central bank's expectation. However, it is expected the inflation will decline to 6.1% this month, which may promote the RBA to slow down its rate hikes. And the retail sales will be still a focus. The data have softened significantly in the last few months due to high cost of living and rising interest rates, suggesting the country's economic growth might be slowing down. Number 4 is New Zealand. New Zealand is to report its business confidence for June this week. The data rose to the highest since December 2021, suggesting the country's economic growth might be resilient for the current quarter after a 2 consecutive negative quarterly growth. With the inflation expectation declining, the RBNZ signal to pause rate hikes. This would be also positive for the country's economy. The last one is Japanese Tokyo CPI for June. The country's CPI printed at 3.2% in May, which was still well above the BOJ's target of 2%. However, the central bank insisted on the ultra-loose monetary policy, which boosted sentiment in the stock markets and lifted it to an all-time high level. At the same time, a decline in the Japanese yen supported exports and attracted foreign investment funds inflow. It will time for the bank to change its dovish stance, even though there are a lot of speculations for the bank to give up the dovish monetary policy. That's all on the horizon for this week. If you have any questions, please leave a comment and I will get back to you. Subscribe to the channel for the future videos, and I wish you a great week ahead.